TLT. It's dynamite. What? No. Okay. TLT, guys, not TNT. All right, let's get back to it. So TLT is the iShares 20 plus year Treasury Bond. BO bond. Yeah. And what do I have here? I have my 10 years monthly candle chart. Wait. I seem to only have about 2 years of data. Why is that? I have no idea. But that will suffice for our Stan Weinstein. What I'm going to do is I see where my monthly candle defines support and resistance is. Monthly candles. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18. I could count. So we have a year and a half here of consolidation pattern. We had a breakdown from this top pattern right here, giving a target. Wow, look at that. It's magic. So right here, we're at the top. Well, we had a consolidation pattern, broke down, closed below that breakdown line, implied measure move, height to bottom, added to breakdown line, and the target was previous resistance support right here at 118. And what happened after that? Well, target reach, and you see that? Look at the wick, went back all the way through that monthly defined support, but got sucked all the way back up right on top of it. Monthly defined support, monthly defined resistance, monthly defined breakdown lines, monthly defined breakout lines. Super duper mucho needs respect. You got to respect those lines, guys. They'll save your butt. They'll keep you out of a trade. They'll give you a reason not to enter the trade. They'll give you a reason to stay out, just wait, not get whipsawed. Look at that. I'm pretty sure if I went on the weekly, I would have had a close here, 1 or 2 closes. Let's go look at. Let's jump. Let's learn. Today we learn. You see that? All that noise. Even on the weekly, the price action got sucked back up. So maybe on the daily, here's the weekly defined resistance. Okay, so there wasn't any breakdowns you could have played on the weekly right here. But it's noise that gets sucked back up. On smaller candles, maybe on the daily, this would have been considered. You could have had a breakout right there. And you could have played it. You could have got trapped. So you got to wait for that monthly candle close. You have more noise here. Look at that. And more noise here. So all that. Whoa. What you doing, Pat? What you doing? Noise, 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 noise. All right. So all these wicks are chances of you getting whipsawed. Same here. And a few targets. Target reach 1 month later. Beautiful. And then after that, sideways action. Now you have a bigger pattern forming. Let's center this. Let's create some right here. So actually you have a couple of things that are happening here. You actually have a 3-month takeoff pattern on the breakout line, which is it's breaking down right now. So I'm doing this on the 16th of May, post on the 17th. There's like 2 more weeks to wait, guys. Wait, because you know what? This there, see, it's not even lower than this wick here. This could easily get sucked back in and close above 118.40, 118.42. This could easily be a noise in a trap, if you like that word. Yeah, 1841. 1847. So that's pretty much the monthly defined resistance breakdown line. Support. Sorry, let's blame Mr. Dilexia. So you have the first target that would be here using my classic chart trading framework. And then you have a secondary target further away. So at least closer the pattern, smaller it is to the breakdown, the more probable you are of reaching that possible target. Bigger pattern, further away, least probable of reaching that target. It's as simple as that. And when you get a close target, take a small one. You could reach it one candle or two really fast. Same here. You could easily get down to 114. And those further away targets, well, you have chance of pullbacks. And every time you have a pullback, if you're not ready for it, it could be emotional landmines. You'll just go crazy and it'll break you. Yeah, that's the hardest part of tradings, man. Expecting those pullbacks, understanding what they are. If they're on low volume or in contracting volume, you're good, or else watch out. But they're part of it. You see your NAV shrink a little bit while they're pulling back up. It's all good, guys. It's part of the process. So they're further away targets. Look at that. You get greedy, right? Because you say, oh, look, I have a small risk. So you enter here. Well, you have to wait for the end of the month for the confirmation, but let's say you would enter here. Put your sell stop here. That's your risk. Here the reward is about the same as the risk, so 1-to-1. But this 1-to-1, 1-to-2, so 3-to-1 risk to reward ratio. You start salivating, right? That greed. Well, it's hard to get down all the way here without any turbulence. All right, so we know 118.42 is my breakdown level. Need a monthly close below it. Repeat after me. Need a monthly close below it. Need a monthly close below it. All right? Okay, thank you. Thank you for listening. And let's go check it out. What do we have? Stage 4, Stage 1, Stage 2, Stage 3, Stage 4. And you could almost make a case that, see this candle here? This was probably the beginning of that Stage 4 right here, this candle right here. So you see this top formation? You had a breakdown candle. There's no Ichimoku cloud, green support. There's no support here. You had the RSI. Again, not the Mansfield, but just a regular RSI going downwards through halfway point. You have the volume almost twice the average of the previous 4 to 5 weeks. So it was actually a breakdown right there. This is classic Stan. What happens after that? Let's make it bigger. Within 1 to 3 months, there's usually a pullback. Guys, you enter here. Let's say you enter here or right here. You wait for that weekly close. Put your sell stop if you're investors all the way up here. If you're a trader, you could put it above the 30-week moving average here. That's your risk. Here. 1, 2, 3, 4, 5, 6, 7, 8. See, 2 months. In between 1 to 3 months. And even here, you could say, oh, look at that, man. To the moon and be so rich. Well, it pulls back. Why? Well, you see these levels here. There's previously defined support right here. It's a natural place for it to bounce back. So if you want to play the Stan Weinstein, then you expect those pullbacks. Then it pulls back up. And if it pulled back up on contracting volume, like this, going down, then this is a good place to enter. So now you could enter close to the breakout line, and you have a smaller risk, bigger position size, and then off you go back. So now you could have had the initial position here, had some position here, and when the price action starts going back towards previous lows right here, then you would remove your sell stops for traders right above that pullback, and investors right here above the pullback, above the 30-week moving average, and off you go. Pretty sweet, right? So this is really, it's been in stage 4 for a while. been in stage 4 for about 2 months. 2 months? 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12. Like 3 months already this has been in stage 4. Wow. So this is definitely stage 4 already. You already had a pullback. Price action starting to get back in here. So now what could happen is I'd wait for the monthly candle close to make sure that the price action stays below, and you could probably enter here. Let me go check back. Yeah. How many months I say go? 1, 2, 3. Yeah, it broke out on this candle. Let me go back. Bear with me. Just want to see what month that candle was. That was the last week of January. Okay, last week of January, early February. Back to the monthly. This is the January candle. So it started going down here. So actually it's a January candle that broke down. And it continued breaking down on the subsequent to a weekly candle. So on the monthly candle chart, you already had a signal here that you were breaking down below the 123 level, and you would have been in the stage 4 right here. Start of stage 4. So the monthly signal was just a little in advance, and after that, down it went. You see how it condenses the pullback, going back down, and here we are today, 3 months later after the breakdown. Remember, it's the getaway candle, pull back, and down. So yeah, if we get another close here, guys, you have another chance to enter, confirm, and look, oh, there's nothing below. This would be actually nicely played on the monthly candle chart. Using my classic trade framework, I would probably put a target right here, 114. And that's why there's I think I posted this on Twitter. You never argue. Well, you could not argue, but don't judge somebody's technical analysis framework. If they're able to apply their risk, money management, and emotion management to their trading framework, it's perfect. There's a lot of overlap. You see how the monthly candle trend, my classic monthly candle trading framework, gives signals that are in harmony with the Stan Weinstein Stage analysis. Well, there's supposed to be overlap of signals on same candles. Like the system is going to start looking at key events. Usually they happen close to one another, and that's all harmony. That's for you should be clues, good flags, not red flags. The opposite of red flag. I don't know what it is, but it signals like, guys, this is the momentum's building in your favor. You have the trend in your favor. It's time to with confidence to get in that trade and not say I don't know, and then you go choose something else because your friend's trading Apple and it's à la mode, and they forget that. Just look at the chart, higher trend, apply a trading framework, make sure you get the a good confirmation on that higher trend. Be patient, wait for that end of month if it's the monthly candle trend, and after that apply another framework or the same framework on a smaller time frame and see if you have confirmation there. And usually that's if they line up and they're in harmony, man, you're putting all the eggs on your side. So that's what I'm going to do, guys. 118.42 key level, key level. Need to close below that for the monthly candle breakdown, and the rest, it's in your favor. Less chances of whipsaws when you do a monthly candle breakdown confirmed. Less chances of a whipsaw. And here you have this nice behavior on the pullback. Pretty cool, right? All right, guys. So this is for TLT. Stage 4 in progress. See ya. All right.